All right, we are live, August 26th. Glad you're here. Glad you're available to share. So let's take a look at the agenda for today. So we're going to start with your questions. This class is about you. I can talk all day about me. Everybody likes to talk about themselves, but this is about you and your success. So I'm going to start with your questions, and I'm going to end with your questions. So let me start with your questions. Anything jump out at you? Got a couple of housekeeping things to go with. Yes. Thursday's not Tuesday.
Okay.
And by the way, please give me feedback. I had some feedback from some of you that said, I'm thinking Tuesday, you know what? I need to try to plan this out. I just think we're going to do Tuesday. And the other thing, it's nice that we're going to have a Wednesday night session as well. So if you're going through and saying, oh, get it, help please, you'll have to Thursday. All right, sorry, 11:59.
There's still Sunday, Thursday.
Now Sunday. So you'll see it Sunday or Sunday night. And we will be using, well, we'll talk about slides. There's two versions of slides, one with the video, one without. Initially, we're going to be using, we'll use the one without the video for this. Which means you can't go out. This is not open book, open note, not a second computer on your right hand, one on your left, please. But the exams will be the full-blown respondents with video. How many have never used respondents? I went through training yesterday, so but that's okay. But we're all learning. And as you know, I think most of you know, this is my first MBA class here. I'm excited to be part of it, part of your future and part of your experience. So thank you for you didn't have to lobby. Sorry, that's okay. Okay, I'm glad to be here. So thank you. Good questions. Anything else? Speaking on your end. Oh, perfect. The 15th will probably be a synchronous exam and some Q&A. But it's going to be a 1 to 2. There's a challenge. By the way, if you have any challenges, talk to me. You need to learn to communicate. I need to figure out if something's not going right for you. You're feeling overwhelmed. Have a conversation. Anything I can do my job to help you. We'll talk about some more resources. Is that a challenge? I'm hearing a hesitation. I'm sensitive.
I'm an old man, figuring out in carousel.
Congratulations.
So trying to figure out how to do this.
Let's talk about that's more of a conversation. Yeah, if there are any other special needs, please. How many actually got a hard cover of the textbook? Everybody else be online. I have a hard copy of here if you want to keep it sometime. Somebody all right, so yeah, we'll be zooming on Saturday for live session. That's I got some feedback, and I have right now we have 4 folks participating virtually, and they can't see me when I step out of the limelight, but they are out of state and or weren't able to be here. So I had a conversation with somebody that says, you know, it's coming back for an hour is not really worth a plane ride. And I agree, I concur. But I do want to get together because I do want to have that face-to-face. The other side of the face-to-face is Wednesday nights. I urge you to participate. I even more urge you to bring questions because you're going to have questions. I've been doing this for a while. Okay, I'm an accountant, all right? And I think I understand most of this stuff. I've taught financial, I've taught managerial, I've taught intermediate, I've taught advanced. I've been down the road in the accounting world. But I know you haven't. And some people say it's nice to be fresh. It's nice to teach a course for the first time and not have the experience, because then you're empathizing with the students and saying, oh, well, I don't understand that either. How would I understand it if they don't understand? So, but I have been teaching this for a while. I'm originally from the North. I'm 30 years in Wisconsin and a native Bostonian. I speak fast. When I watch videos, I watch them at either 1.25 or 1.5 speed, try to be more efficient. If I talk too fast, if I say something confusing today on a Wednesday in December, when we have private Zoom sessions or phone calls, or you stop on campus and said, you offered to take us to lunch at the cottage. If I asked if I'm there when you are, and that offer still goes, by the way, if you're on campus, come on by, I'll take you for lunch at the cottage. And I know you're on campus, so, and I will, off it goes. We're good to go. Okay. We'll start with one. Okay, we'll see about every day. We'll work that out. Okay, so the opportunity is there. Because I'd love to get to know you more as well. And then pick my brain. I always told undergrads, you want to get to know at least one faculty member a semester. They're the folks that have the connections. They have the network. They have knowledge. They're going to be writing the recommendations. They're going to be saying, oh, there's a six-figure job in Arizona. One of my students graduated in May. A six-figure job in Arizona. What's he doing? Well, he gives back to his alma mater and said, Scott, there's an opportunity here. Wharton, Harvard, Stanford, Francis Marion. We're all represented in this training program, internship training program. And he's saying, do you know anybody? And I have some ideas, but I didn't know you yet. But I did have some ideas, and it is a management training program. But he was accounting finance, right? He's finance actually, not accounting. But he is on the ball, and he's doing well in that grouping, and you will too. So you're coming out of a program that's pretty strong, that has a lot of talent. That's one of the reasons I'm here. I love the teaching side, and we don't have TAs. I was at a conference, and some faculty member was saying, "Yep, I teach 900 students in my accounting course." I said, "So how do you do that?" "Oh, well, I've got 3 TAs, teaching assistants. It's easy." I said, "Okay, no, that's not why I'm here. I'm here to serve you, and anything I can do to make your learning more effective and easier. Let's chat. Let's have that communication." It is dialogue. It is a two-way street. Okay. I also posted entrepreneurship and CMA. I'm not trying to add more work to your life, but I will share that I was able to get a $100 scholarship. There is a program. We have the Kelly Center here, entrepreneurship. FMU's Keller Center for Economic Development. Great place downtown. They have an entrepreneurship certification. It's a $200 program. It's for small business entrepreneurs. If you're entrepreneurially oriented or know somebody that is in the MBA program, I spoke to them. They had to check 2 things. One is, can you take a non-credit course, credit course while you're here? Well, they checked that and said, yep, we can do a management course. It is no credit, 0 credit. But they also said, we can give $100 scholarships out of the 200 for MBA students. You have till the 1st of September, that's next Thursday, I think, to actually reach out if you're interested. But I just want, if there's opportunities, I want to present them. Some of you are accounting majors, finance majors, business majors, and you're going to take this course and say, a lot of it's a review. I'm going to get some new stuff out of it. I'll get some value, but maybe I want to do some other things. Many of you are saying, I was psychology or biology, or I would really like to learn accounting, and you will, but maybe this won't be for you, and that's okay. I'm not trying to pile more work. There's no extra credit. I'm actually just going to do extra credit. I said, you know what? I don't want to go down that path. I don't want to put more pressure on you. You'll have plenty of you. The other thing for experienced folks at accounting, finance, or management background, how many have heard of a CPA, Certified Public Accountant? Okay, they're public, they do taxes, they do audits, and they go around doing consulting, helping other companies. How many have heard of the CMA, Certified Management Accountant? That's more of internal accounting. It's an internationally recognized standard. It's a 2 test instead of 4 test. But we get a number of scholarships that I have input on from the Institute of Management Accountants for the CMA. If you are interested in the scholarship, there's no cash. No one's going to write you a check, but you will get free IMA. Too bad. I get it. A free IMA membership. I look at those expressions. That's what I like about live instruction. I could gauge a classroom much better. The IMA, it's going to be expressive, so thank you. The IMA is a powerful opportunity to get certified. So, you know, if you look at a pile of resumes, you say, well, these folks are good, but this person has a CPA or a CMA, you rise to the top pretty quick. That CMA program, if you're of interest, talk to me about it. I'm just going to put it on the table. I'm not going to survey anybody. But if you have some accounting and finance background, it's a great certification. It's 2 tests. Even as an undergrad, you can pass the test and get it. You don't need 150 credit hours as a CPA needs, 120 is fine. So then those 2 are both posted. I will be deleting or removing these announcements so that doesn't get cluttered with 200. I've seen a few communications from me, I think. I hope you read them and actually internalized them, and hopefully they made sense. All right, I want to share some Blackboard structure. I did make a little bit of editing to go be consistent with conversations I've been having. And you've seen this, you're probably familiar. You got the start here, you've all started here, you're all logged in. Calendar here, the asterisk says, okay, asterisk, that means I better do something with that. So the announcements are kind of important. My grades, I didn't asterisk, but I'm sure you'll be asterisking it yourself. And that's okay. There's an Ask the Instructor section. It's a discussion. If you have a question or problem to document, it's a public forum. But if you have questions, maybe your classmates have the same questions. It's actually likely they have the same questions. You're welcome to reach out, phone, text, email to me directly. Schedule Calendly. I have that in the syllabus. So I've got a calendar schedule. You have access to my full Outlook calendar. So you're welcome to schedule a time if need be. But I wanted to put that on there so that you are aware that Ask the Instructor is a section or segment on there. It's been on there, but I want to highlight. So the assignments, discussions, you figured out. Let's fight dialogue with your classmates too, by the way. You were given feedback. I mean, hopefully this is your network. And I want to thank those that put their LinkedIn link on their profile as well, because connect. Go ahead, your classmates. It's more than a resume on screen. I'm a LinkedIn fan. I'm happy to talk outside the class at any time, discuss that. Wednesday recordings I will be posting on here as well. Now, if there's only 1 or 2 people that show up and there's no questions, I may not have a recording. So I would urge you and encourage you. And if you are reluctant to be recorded, we can work around that too. But I want to make sure that you get the maximum benefit of the conversations. I'd like to have as much face time as we can to have those conversations and to answer your questions. There's limits to what we can do online. The textbook assignments. I had the PowerPoints in one place and I had a whole list of them. Reorganize that a little bit. So I'll show you what we're doing. The registration link you don't see anymore. That was pulled out in the student view. But you do see suggested PowerPoint, which, as I was talking Wednesday night, I encourage you to actually go through the PowerPoint. You may not be familiar with the terms. You may get baffled and befuddled as you read that stuff saying, this is confusing as heck. But once you see it there, you read it in the textbook, you do some problems, exercises, you work through that stuff, you will get more comfortable. You'll see it again and again, and it's marketing. How many are taking marketing next in an hour? Most of you read through there. Yeah. It's marketing, it's exposure. The more exposure you have, the more exposure you get, that's going to start to register. And as I said out there, accounting is a language. It is the language of business. If you can understand that language, it's going to carry you far in your business and in your profession in the directions that you see. So start with suggested PowerPoint. Then there's access to suggested readings. Now I put a link in there. You can go straight to the book. You can read the book. You don't need that link. But if you find it easier, click on the link. That'll take you to the book, to the chapter we're on. There's a table of contents. You can read through wherever you're most comfortable reading. If you have the hard copy and you're like highlighting, post-it notes, whatever it might be, taking notes. There are studies that have shown physically handwriting notes rather than typing notes. I read that, that's cool, is better. It actually registers with the brain more. It actually has that, there's all this neuro stuff that's being discussed, neuroplasticity and the ability to learn and the power of the brain. It's you all get powerful brains and maybe use them well. I also have my lectures there will be showing up. So I heard there was some confusion. There was optional resources. I retitled it, just said MBC resources. It's optional. These are not, you don't need to go through 2 hours, 3 hours of videos and another 4 hours of problems. That's not the intent of this class to overwhelm you. You might think it is, you might feel that way, but that's not the intent. The homework, as you can see, when it's due directly, but I'm going to go to optional resources. And you'll see the LO1, LO2, LO3. Those are lectures. It's not me. That's actually lectures by the author. Some of you will say, Dr. Scott, I like how you talk. I like what you say. I can listen to you all day. Others are going to say, from Boston, you talk too fast. You're going to say, can I get a second opinion? You're going to have somebody else to listen to. Well, you do. And I'll talk about Ben and Boz a little bit later. They're another resource to listen to. So, and these are nice, these are shorter. These are bite size. So if you start saying, you know what, basic probability analysis, or something about analyzing financial statements, I just want to listen to that little one, LO6, on analyzing financial statements. Like, Scott, I know you went through the financial statements, how to create them, balance sheet, income statement, all that good stuff. That was cool. But I need a little bit of a refresher, and I just need a bite-sized chunk. And these are probably a little bit more bite-sized than what I told you with. But it's nice having the recordings because you can listen to them as many times you want. But again, this is optional resources. This is additional. You don't have to listen to all those videos and all my videos and do all the problems if you really want to. If you're looking for punishment, go for it. But you probably don't have to. And then there's reviews, and those are also videos. Those are actually pretty good for exams, even for quizzes. So again, you don't have to do them all, or you can accelerate them to 1.25 or 1.5 or 1.75 if you're so inclined. But then you have the tools before you. So this is the resource. That's one of the reasons I didn't really like this test. It's pretty comprehensive. It has a lot of tools and resources built into it to help you. My lectures will be the gospel, will be gold, I hope. But the reality is you have other resources too. So you don't just have to listen to me. But you don't have to, and you don't have to do me at all, and you can just do these. You don't have to listen to them at all, and just listen to me. You don't have to listen to any of us, just read the book. I don't know what your learning style is. I don't know what's best for you. So for some of you, this is a review. You've already had accounting, you've already had finance, you're pretty comfortable with stuff. You'll use this stuff in econ. You'll use this stuff in operations again. You'll use this stuff throughout your professional career. This is a foundation we're building. So any investment right now of time and effort into this class will pay off. That's the goal, that's the dream, and that's the reality. So, I do have quizzes and exams are found over here under quizzes and exams. And then most frequently used, that's just an asterisk reference. So that's all you can see. Other tools, free Microsoft Office download, Wall Street Journal. The second discussion is if you get through the first 2 weeks, there's a lot getting oriented the first 2 weeks. I think you'll find that it's not going to slide, but it'll be a pace that is very little more manageable. But I popped some resources in there, subscribing to some newsletters, subscribing to some other things. And I'll post things in announcements like these scholarships. They may not apply to most of you, and that's okay. You can read them, not read them, or talk to me about them if you want. But again, this is to help everyone. You're going to be getting to know your classmates. You're going to be getting to know others. So let's go on back to our announcements and the agenda, and then we'll get to our projects, some slides and stuff. Okay. So homework due dates. The discussion's description has a due date. The homework itself has a due date. And most of those will show up on the calendar. The quizzes aren't showing up on the calendar right now until they're released. And once I release them, they'll show up, and again, they'll be Thursday at 11:15. And you'll see those. But Blackboard is the gospel. The syllabus has, module one for a couple of days, module two a couple of days, module three, just like chapters. But those are not due dates for those modules. The due dates could carry over into the homework discussion. Those are the 2 areas, and then the quizzes and tests. Those are 4 areas you're going to need to be aware of. That's where you'll find most of your assignments. Announcements may have some good information as well. Quizzes posted Sunday by midnight, due on Thursday. I also got some feedback on cohorts. And I found that some of you have been working in 605, had a great group. And then I started leaning towards, you know what? I'm saying, it's nice to meet different people, but if you got something working, why mess with it? Why mess with success? And then I said, but you guys are all busy. You guys work, study, sports, activities, and coordination. I don't need to add one more pressure to you. So if you want to form cohorts, if you want to form study groups, right after class, talk to some of your fellow students. When you saw in that conversation, those discussions, find some people that you felt good talking to, and by all means, get together and connect with them on LinkedIn. That's the other trick. Yes. Anywhere from 1 to 30. Now, the ideal study group is like a 3 or 4 person group. I'm in some masterminds. And we've got 4 or 5 people, and usually every week 1 or 2 might be missing. And so we got 3 or 4 people. We got a inertia, we have good discussions, we compare notes, talk to smart people, you get smart ideas. So if you have a group that you're comfortable with and some classmates that you can talk to, or might like to get to know better, or in a field or at the same place you are. Because I'll tell you, I used to teach computers. I had a computer training company, we had 3 offices, and it was a pretty good operation. But the catch was teaching a class, I'd rather teach a class from 18 to 65 at a similar level than teach a class of all 28-year-olds that are at different levels, beginning, advanced, and middle. And it's real tough in groups because you will have, I can spell accounting. And you know, the other folks that say, oh, I just did my taxes and I read my financials and I review them. I work for a bank or I work wherever I do. And that's a tough bridge to cross if you're at different levels. So we don't have any group projects. Today we'll have some group activities and we randomize. It won't be high pressure. But I do want to say that, yes, the opportunity to get together, now's the time. These are your future fellow alumni. Okay, FFA, not Future Farmers of America, but your future fellow alumni that you want to get to know. My second master's was in education after I got the MBA. None of my classmates I met them at graduation. Okay, that was where we met. Right, but I did walk for my master's, second master's. But I was interacting with a number of my classmates on the virtual program. My doctorate was 3 days a month, 24 months straight, and then a year to dissertate. And that was live instruction. That was really good. We had a pretty strong core. The people you meet, the future, those are the folks you interact with. Take advantage of that. And I mean, not all the soccer players have to get together and just talk to soccer players. All right. I mean, we've got a pretty good contingent here that are talented. Okay? But the same thing, you know, you all have similar interests. That comment about removing the chocolate from the brownies was sacrilege, as I mentioned in the response in the discussion group. How would you remove chocolate from the recipe? But anyways, you get the idea. Folks that like similar things that you can get along with, that you can talk to, take advantage, because these are the folks that you're going to, you know, you'll understand some things they don't. They'll understand some things you don't. Or they'll have an idea of how you can improve. And then you start talking about other stuff professionally, work, interviews, whatever it might be. You get to know folks. Okay. We have, so not assigned cohorts or study groups, it's up to you. I'm not doing anything with that. We're going to go through some slides as a review today, and then we're going to do something similar that we did on the Wednesday night call. How many felt comfortable, think they can go into Edgar, find an income statement, and do some basic analysis? Yeah, that's what I'm seeing. We're going to get some more practice with that today. I really want you to really experience that and do a walkthrough and try it. So we will go ahead and do that in a few minutes. But first, I want to go through a few slides. So I'm going to go into PowerPoint, and I'm going to go into, actually, I'll go the same way you would go. I'm going to go into module 1. I'm going to go into suggested PowerPoint. And computer crashed and burned. This was all set up so nice. Well, you know what? I'm going to cheat and go directly to my access. Okay. Okay. So I did record a number of slides, and these are the numbers I put on here that I will be reviewing with you, just to review some of the stuff we talked about Wednesday and some stuff outside that. So this is the same slide deck you have. Screen up a little bit. Seems kind of cool. You can do this advanced share stuff. Do that. You don't have to squint your eyes, see the whole screen and see how the other jump goes with it. Okay. So I'm going to first jump down to slide 15 and have that conversation. So we're talking about financial statements. They are linked. The financial statements, let's start going around the room. Right, give me the name of, actually, do it in the front row. I'm gonna go back. Give me a name of one of the financial statements. Income statement, perfect. Quick survey, got a point in time or a period of time? Period, great. So income statements, XYZ Corp. For year ending, let's do 1/31 X1. Fiscal year ending January 31st. 3 line. If you said income statement XYZ Corp. for January 31st, that's my revenue, my sales on January 31st, rent expenses on January 31st, net income on January 31st. No, it's got to be a period of time. Quarter, months, could be for 12 months. Go ahead, give me another statement. Balance. Oh, I love a balance. Has to be in balance. Anybody know what the accounting equation is? Perfect. Well said. A T account, accountants love to. Those better add up, those better be. Point in time or period of time? Point. I can say, what's my inventory on December 31st? What's my inventory on January 31st? If I ask you, what's my inventory for the month of January? You say, well, January 1st is this. I bought some stuff on the 2nd. I sold some stuff on the 3rd. My inventory, it makes no sense whatsoever. I said, what's my month of January inventory? So this is balance sheet, XYZ Corp. And this is an actual date. 3-line title, standard. Don't put a 3-line title like you will on a test. Does they care about tests? Yeah. All right. Give me another statement. What do we got for statements? The phone's important, but give me a statement. Okay. That's a statement. Got a balance sheet, got an income statement. You can actually cheat. This is adult ed, we're collaborating. Statement of cash flow, I like that. Same question, point in time or period of time? Periods for the cash flow for the year. What are the 3 sections of a cash flow statement? Anybody know?
Operating,
Wonderful, operating, investing, finance. And if we look at a cash flow statement, just think about it. I can have $1 million in sales. Okay, so I got sales revenue of $1 million. I might have 100K in expenses. So I have 900K in net income. I have accounts receivable of $1 million. Okay. I have liabilities. I have $100,000 obligations. Accounts payable. And because my retained earnings, plus your income, minus what? Dividends. Dividends. I said. What's my ending retained earnings right now on this balance sheet? I have 0 beginning retained earnings. What's my net income? 900,000. Good. How much did I pay in dividends to stockholders? Zip. What's my new retained earnings? I'm going to pay retained earnings. My balance, I got $1 million in assets and liabilities. I got $1 million in assets. Liabilities. How can I go out of business with $1 million in sales? $900,000 in profits. Yeah, why wouldn't you pay your bills in time? I don't have any cash. Zero. I don't have any money. I can't pay my employees. I can't pay my rents. I can't pay my suppliers. How long do you think the landlord's going to hang on with no rent? Your employees are gonna stay without a paycheck. Not very long, good answer, right? You go out of business. Now, you might be able to sell your receivables. If they're good, somebody can help factoring. These are assets, you can put them to cash, or you can get say, hey, pay your bill, you owe me $100,000 or $1 million. Pay 20%. I need some working capital. I need some money to pay some obligations. Operational stuff comes from current assets, current liabilities. I got my inventory, so that's my name to business. I have my vendor, my customers paying me receivables. I have vendors paying payable for stuff I'm getting access and taking advantage. So I've got operations. This is the best predictor of future success. What's my cash flow from operations? Right now, my cash flow from operations is pretty negative. Okay. I get $1 million in receivable, $100,000, I get $900,000 negative. Investing is not somebody investing in you. Investing, so we had current assets, current liabilities. Investing is investing in capital equipment, PP&E, property, plant, equipment. Here, see the whiteboard. Okay. But you can hear me, right? Wait a second, because I'm going to do a live transcript. That way, I should have done that at the beginning. Description, we're on. We're good. My apologies. Keep going. All right. So, property, plant, and equipment. I'm willing to buy non-current assets or long-term assets, fixed assets, land, building, equipment, all kinds of stuff. I might get patents. I have intangible assets. I got goodwill. All this stuff is invested. I might actually invest in a competitor or a supplier or a customer. I might fund a customer so they can survive. Because then they buy more stuff. If they buy more stuff, I can sell them more stuff. And yeah, I might float some money and they give them a loan. But all that stuff, non-current, this is all invested. Long-term, non-current assets. And then we get the finance. How do I finance this? Do I go out and borrow money, issue bonds, go to a bank and say, please give me some money? How many of you work at a bank? I won't bad about banks. I promise.
Well, I work at credit union.
Yeah. Actually, I love credit unions.
Yeah.
And Madison is credit union national association territories. You know, so that's I deal with clients. That is. All right. So, okay, that's the idea though is you go to a bank, they're going to tell you, what do you have for collateral? Yeah, but what's that worth? Well, I got some cash right now, but I'm going to spend it. I got a business, I got expenses, I pay my employees. The bank says, well, you got a building, you can collateralize. You take it if you don't pay us. If you got personal assets, you can do personal guarantee. So you might go in the public markets to pay a little more money, but you issue bonds, or you call your uncle, aunt, parents, friends, classmates, classmates. But you say you want to invest. I need to borrow some money. That way you have to pay interest, you don't have to, you're not going to share any profits. Or you attract investors. So what happens if you invest $1,000 and you invest $99,000? You own 1% of the company, you own 99% of the company. Congratulations. You get 1% of the profits, you get 99% of the profits. So it's always nice to do something else when you can, but it's also a balance. So you have to figure out how to finance. The financing is, and this is non-current liabilities or long-term liabilities and equity. These tell a story. The balance sheet, the income statement, the cash flow statement. Tell the story. You're Picasso. You're drawing a picture of the company. You're showing and saying, you know what? We get positive cash flow from financing because we've got a lot of people invested in that stuff. That's the early stages. We get negative cash flow from investing because we want to buy a bunch of equipment. Although we sell it, it's positive cash flow. But when you're buying it, that's a drain of your cash flow. And we've got zero sales right now. We opened our doors. So we got drains up, we're paying our expenses, we're paying our employees, we're paying our rent, we get sick. As we start going, this kind of levels off. This kind of goes up and down, but levels off. This starts hopefully ultimately spinning off positive. Cash is king and queen and running and having a business. So if you don't have the cash flow, actually zero. Good experience to have, but not good for the bank, not good for your own experience. All right. And by the way, the statement of retained earnings or the statement of stockholders' equity, which includes the investment and the retained earnings, is that other statement that you can see in that big picture. Any questions on that stuff? A lot of the ratios we do, we will have to take an average of our balance sheet. We do return on assets. How we calculate ROA, return on assets? What's the numerator? Net income or net earnings or profit, net profit or returns are all the same thing. That's why accountants are good at this. Because we confuse people by saying the same thing with different words. So we've got net return on assets. We've got net income, net profit, or return over what kind of assets? Thank you. Average assets. How do you calculate the average? Beginning plus ending divided by 2. Thank you. I take my beginning balance sheet, which is end of year last year, my ending balance sheet, I have to average my inventory. Why do I have to take my 2 points in time here and average them? Because my income statement is for the whole year. So return on asset, return on equity. It gets real confusing when you say, oh, don't just take my total assets, denominator, net income numerator, I got my return on assets. Yeah, you have to take that average. But it's logical. Anytime you're mixing an income statement item with a balance sheet item, you have to have it. That's a tip. We'll get to my analysis later on. I want to make sure we're on the same page. All right, I'm going to jump down to 21. Okay, so we're looking here. Here's Apple. Anybody hear of Apple? Income statement. So we have net revenues. Why do they call that sales? Just to confuse you. We have cost of goods sold, also known as cost of sales, also known as cost of products sold. If you're next on, it might be cost of oil. That's the stuff you sell. Does it confuse you if you have different terms for cost of goods sold? I'll just call them COGS here forevermore, but they can be different things on different income statements. You will see. We calculated gross profit. Remember we did our exercise. We found out we're making less than 5 cents on our $2 gallon of milk last Wednesday. And how many were surprised by that? Takers? Yeah. It opens your eye. Now they got billions of dollars in profits, lots of volume, but they did not on an individual life. So we have a gross profit. We have SG&A. I'll be calling it SG&A, not selling general administrative. That's typical. That's part of the problems. Again, not hopefully not confusing you, but sometimes does. Then we have income from operations. Again, we're emphasizing the operational side of the house. That's our mainstream business. What do we sell? We sell iPads and iPhones. And then we got music. And then we got a whole bunch of other things we start selling. I'm an Android guy, so but that's okay. And then we have interest. Why is interest income not part of operations? Well, my bankers here would say interest income is my operations. I sell money. That's the business I'm in. But if you're not selling money, interest is outside operations. Interest income, as well as interest expense. Income before taxes, provision for income taxes, that's outside. And then bottom line, and bottom line is important, but so is income from operations. And we separate some other things before we get to the bottom. So there's our income statement. When we talked about in Wednesday, when do we recognize cost of goods sold? When we sell the stuff. We bought inventory. How much do we have in expenses? None. The inventory is sitting on my balance sheet. Not on my income statement. It's not something. That's GAAP, generally accepted accounting principles. Let's go through a few more of these. Cost of goods sold, COGS, paid to purchase or manufacture goods or inventories. By the way, inventory is not just finished product. It is for Walmart. They don't make a lot. But Ford, GM, Tesla, they're gonna have work in process. They're gonna have raw materials, and they will have finished goods. And they might even have labor included in the value of the inventory. What type of labor inventory? Labor and overhead can be added. We'll probably get more of that. But just be aware, it's not just the stuff. There's our SG&A, salaries, marketing. So wait a minute, if I do an ad campaign, my cost of goods sold, I have to do that matching. Sell the product, I match the cost. If I put ads in the paper or online, social media, can't I expense it as it matches the sales? No, we just period timing. It's like your employees. Employees make stuff, they sell stuff, but even commissions, we don't separate that out and say, oh, that's cost of goods sold, a commission. That's all part of SG. It's all part of salaries. All right, let's go quickly and get on to 22. Actually, you might want to write down these slide numbers and refer to them. 15, 21, 22 through 27, 29, 32, 39, 48, 53. Those would be good slides to review, talk about. I'm going to just spend a little time on operating income, and then we're going to count off and get into groups and do some calculations. Notice our operating income, not net profit, operating profit. Above the line. Intel, over 30%, like a third revenue dollars goes into their pocket. Down to Best Buy, goes to 4%, 5%. CVSL, Target, Nordstrom, Macy's, retailers, historically low. Walmart. And 3 ends up food chain, Procter & Gamble, Procter & Gamble, J&J, Johnson & Johnson, Cisco, high tech, Apple, Alphabet, Google, Meta, Facebook. They're all high margin, high net income percentages. Is that a better company to invest in? Not better or worse. People factor that in when you make the investment and their returns and how it's going. Statement of cash flows. We've talked a little bit about that. We've got enough there. Contributed capital retainer. We're going to have stockholders' equity. We have common stock, additional paid in capital, the stuff we sell. Retained earnings is what's retained in the business. Double taxation for corporations. They pay taxes on the profits. And then when they send out dividends, the recipient of the dividends pay tax on the dividends. That's double taxation. I'm going to have you count off by, let's count off by 6.
4, 5, 1, 2, 1, 5, 2, 4, 5, 6, 1.
Now we separate. 1's together, 2's together, 3's together. Remember your number? Gather round. Let's have some fun. I mean, we're already having fun. Yeah. Sure we are. You haven't convinced me yet, Scott. No. And I'm going to have you that are online, Jesse, Lindsay, and Kristen, go ahead, and I'm going to pass around a sign-in sheet. I'm going to have everybody sign in. And what's your undergraduate major? Please, your undergraduate major on the sheet. Can you sign it? And while you're getting together, I'm going to make a comment here. The financial statements also include footnotes, which are important to read, management discussion analysis, the auditor's report. I'm going to take a quick survey. How many have heard of the auditor's report before? Hopefully you read about it, you might have heard about it. Is an unqualified opinion good or bad?
Good.
Well, let it be other.
Good.
You only get one vote, I'm sorry. Unqualified, it depends on the answer. But in this case, you gotta vote. Unqualified good, unqualified bad. It's good. Well, cool. Why is it good? That's unqualified. I'm not unqualified, I'm qualified. I'm qualified. So unqualified is no qualifications on the opinion. You're gonna be learning about GAAP, generally accepted accounting principles. And if there are qualifications, if the report says, we looked at the books, they're cool, except for I'm qualifying it. We don't think they're gonna be around tomorrow. Not going. Or they didn't record their revenues right. Or there should be more expenses that they put on the books than they did. Artificially high net. That's a qualification that the auditors say are exception to GAAP. And that exception to GAAP, any investor looks at that and says, why are you not following GAAP? You really should be following the standards. An unqualified or no qualifications is good because we looked at the books and they're cool. No qualification. Unqualified opinion. Be careful of the English, we're talking accounting, not English. So that's the balance. So auditor's report kind of opinion, it does not guarantee no fraud. It doesn't guarantee there aren't errors or mistakes. It just guarantees someone else looked at them and said, I think they're okay. GAAP, we talked about GAAP before. SOX, I want to mention Sarbanes-Oxley, 2002, 2003 came out, time of Enron, waste management, health south, a whole bunch of things were going on. They were trying to restore confidence. They put a whole bunch of rules and regs together, and there were actually some pretty good rules and regs. So that's on 29, and then 32. So the other thing I want to look at is right here. Return on assets. We just calculated return on assets. It was net income divided by average assets. And then we have, we're going to do that for these companies. And I'm going to ask for you two numbers. I'm going to have you in your group select, pull out your laptop. I hope somebody has, everybody have a laptop in their groups, at least one. You have a tablet or a laptop?
Oh, yeah.
Okay. Pop it open. We're going to go into Edgar. We're going to do this together. And you're going to agree on a company that you want to do. And if you can have duplicates, you know, if everybody says, I want Amazon, man, you can do that. But I'd pick a Sunoco or pick a company that you might be interested in working with or have affiliation with. Or maybe I'm in banking, maybe BOA, maybe I want Wells Fargo. I want you to calculate net income percentage, like we did. And I want you to calculate return on assets, return on average assets. So I'm going to walk through that with you right now. So I'm going to go see, we've got 9 minutes in class to go. And I'm going to jump into Edgar. You've seen this before. There's on the right keys. I've got Edgar. I'm going to go in, and actually I'm going to go to new share. It's going to be the whole screen, not just that segment screen that we want. Okay, so as Edgar, sec.gov. We go into Edgar. I'm going to walk you through it. You can write down the steps as you go. And then you can pick a company. And why don't I'm going to pick Spectrum. Okay, the Spectrum brands. Maybe I need Charter. If I had to do the ticker symbol, I'd probably be better off. Charter Communications, yep, CHTR. They are, but they go by the brand name Spectrum. So I'm going to go into Charter. Upper right-hand corner, see this word classic version? Make sure to strike classic version. So I'm going to go into the classic version. And the filing type, I said you needed the 10K, 10-K. And then you're going to go into interactive data. And from interactive data, if you want to get fancy, you can view Excel document and you get all the tabs. But I'm just going to go to financial statements here. They have a consolidated balance sheet, parentheticals. I want the first one. Statement of operations, statement of changes in shareholder equity, statement of cash flows. Which of those is the income statement? That's why we make the big bucks again. We confuse you with the words. Consolidated statement of Operations, thank you. Statement of operations. Let's take a look at it. Does it have revenues and expenses? Yep, revenues are there, expenses are there. We're good to go. So I'm gonna have you agree to a company in your group, pick it, go through this exercise. Give me a net income, give me a company name, a net income percentage, and a return on assets. Yeah, if we had time, I would have done the exercise of two to the lie or something, but. And the sign-in sheet, how far has that gotten around? Thank you. You're all accountants in this class, so don't go. Oh, you can go. You can.
No.
Comprehensive, the bad news. It's not comprehensive income of you. Go look at the statement of comprehensive income. It's not with revenues. Yep. Parenthetical. So which one of those? That's why, right here, prior to saying it said statement of operation or statement of profit and loss. It says comprehensive income, that's bad news. Comprehensive income.
Yeah. So the first one,
Right here.
yeah, the first one,
Right.
we are going by the, yeah. Income and comprehensive income, so we will just at the. They would help.
Is it possible that, people way, when you have it? Or that is Right. Well, I guess
Yeah, that's it. Anybody having problems finding out?
What are we calculating?
What's that?
What are we calculating?
Okay, you're gonna calculate the net income percentage and return on assets. And I want to get the names of the companies that you chose. Who do you got? Ruger. R-U-E-G-E-R. Okay, sprinkle.
XDM.
What do you got? Chick-fil-A. What you got? Chipotle?
No, yeah.
What you got? Verizon? Pepsi? Yeah, but it goes on Sunday. Pass on. And last but not least. Company. Pardon. And as soon as you get one of those numbers, come on up and pop it up here. Same way we calculated the Walmart percentage, you take net income divided by, that's it. Then our return assets, net income divided by average assets. How are you guys doing?
He's done very well.
Okay. That's all it takes is one. Kate, Kristen, Lindsay, Jesse, what companies have you chosen? You can pop in the chat if you want.
Full disclosure, you didn't tell us what to do.
Here,
so
I got your phone. Oh, that's right. I don't get till 2. I get till now. I tell you what, take this with you. I'm gonna end class and send me an email. Actually, I'll put it in discussion. I'm gonna put this in a discussion format so that you can take this, so all of you get comfortable doing this. On that note, any questions before we part company? Did everybody sign in? Where's the sign-in sheet, by the way? Sign-in sheet? Sign it. So again, pick a company. Again, I'll put a discussion up there. Only one from your group or individuals you need apply each year. I'm gonna put it on a spreadsheet. I'll show you what I'm talking about. I'll have that done. I'll have that invited. Thank you all. Any parting questions, challenges? Thoughts? The door's open. Come on by for lunch.
Dr. Scott,
Thank you, guys.
Dr. Scott,
So